Welcome, and I hope you're having a great week of trading or investing in the markets. Are you finding it to be a little bit intimidating at times? Have you had your fingers burnt on some of these momentum trades? What's been going on with you? Feel free to leave a comment in the comment section, and definitely an invitation to have an interaction and a connection. I should give a caveat. I am not a financial advisor. I'm simply here sharing some views, some analysis, and some distinctions on investing in the market. My name is David Rogers, and welcome to Continual Shift, a channel committed to assisting people to make shifts happen in their life, because I've learned that shift does happen in our life. So hopefully this channel today can give you some insights and distinctions. I'm looking to build this up to be able to have some interaction and support the traders or investors in the YouTube world. So let's get started on a topic that is in the news today because of Shopify. Shopify became the most valuable stock in the Toronto Stock Exchange and the Canadian Stock Exchange, taking over that place from the Royal Bank of Canada. Now, have we seen technology companies do that in the past? And the answer is absolutely yes. One of the most famous ones was Northern Telecom, that went up from 20 to 40 to 60 to over $100, and then within 18 months, crashing to zero. So my caveat emptor, buyer beware to everyone, is that some of these momentum stocks can have great runs, yet they can have incredible crashes as well. I've chosen today 5 that have recently hit their new high. And so that's an indicator, given the market's been fairly volatile, yet since March, it's been going back up. Now, some people are sitting on the sidelines with a lot of cash ready for a crash back to those levels so that they can buy. Yet a number of stocks have just been persistent, growing, adding value, yet more importantly, getting momentum. And so if you were to look around the marketplace, one of the easiest ways to do that is to see the new high list. And I've highlighted 5 today, and hopefully it may give you an idea. And I've also got an idea that may allow you to play more than one if you have the appetite for this type of risk. So the first one we're going to talk a little bit about is Zynga. Zynga has a range in the last 52 weeks of 5.5 to 8, and it's currently at about 875. And then the number 2 is Activision, 41.8 to 74.8 has it's been its 52-week range. Number 2 is EA Arts, and Electronic Arts is 85.69 to 120.19. And then Etsy, 29.95 to 78.63. And then last but not least, the one that just hit its new highs is Shopify, that went from 242 to over 739. And so one of the things that you can do to analyze it, to understand it, and what I've done is created a Yahoo Finance paper trading. Now, one of the things that's nice is that you can do an analysis, you can go and study the charts, you can look at the financials, and it's one of the things that I invite particularly our value investors to do. For our momentum investors, we can look at some of the charts, some of the ways that people are putting more of their capital into these stocks that is allowing and pushing them to new highs. And that's one of the things about momentum trading. You're looking is to see how this momentum is happening, and then using your analysis and your risk appetite, your levels that you're hoping to see it go, and then you might put some money at risk. So the way that I did this was simply put it into a spreadsheet. And this spreadsheet is right here. And so it's a nice spreadsheet for understanding on how many shares you could buy, understanding the rates it's at, a little bit of information that you can go and check out all of the information for each of these stocks. For Zynga, If you're not familiar with it, Zynga develops markets and operates social games throughout the United States and internationally. Basically, it's a revenue model based on advertising and using agencies and brokers. It's created quite a attractive brand in the market to collaborate and to post advertisings on multiple sites. Started in 2007 and it's located in San Francisco. If I was using $2,000 as an attempt target, how many shares you could buy. So today at 754, 300 shares would cost you $2,265 to get a stake in Zynga. The next one we'll talk a little bit about is Etsy. And what Etsy has done is created a number of communities online. It creates online marketplaces for buyers and sellers, and it's located primarily in the States, in Canada, Australia, France, and Germany. Check it out as another way for you to do online business. And I think that's the commonality of each of these momentum shares is they're not being affected by COVID-19. They are tech savvy and they're creating communities that can contribute, can deliver, and can create value for makers, can create value for people who are looking to take on the big boys. That's often mentioned in taking on Amazon, Etsy, Shopify, have the ability to do that very effectively. The other thing about Etsy is they have a great payment system. They make shipping very easy. They add value to any type of sellers. Their dashboards are very attractive. So again, perhaps you're looking for another way to add some money to your cash flow. So Etsy could be one of those items that allows you to learn. In fact, that's one of the principles of my investing is if you love Etsy, if you're using Etsy, then perhaps you want to invest in Etsy. And it's one of the ways that I encouraged my teenage son when he first started investing. He loved Apple at the time. So instead of just buying Apple products all the time, how about buying Apple stock? And so in this case, if you're looking at an online business, perhaps you do a little work, do a little research into Etsy. And if you really start to like it, if you maybe try it and practice with it, you can invest in it. And that's one of the ways that your life will totally change when you not only invest in stocks that you really like, you develop a greater understanding of the stocks. And that's one of the major reasons I'm in this channel and sharing what I like to do and that I do enjoy stocks. I'm hoping I can assist you in understanding more about stocks, making money with stocks, but also as an entrepreneur, become more aware of the different types of technology that's available. The next one is EA. And EA I have seen, observed, and noticed for a long time, yet I've never pulled the trigger on EA. EA develops, markets, and publishes games, content, and services for game consoles, PCs. It publishes across a whole range of sports, shooter, action, role-playing simulation. Some of the names are Battlefield, Apex Legends, Speed, Zombie Brands, FIFA, Madden, NFL, and all the Star Wars. Licenses, it has been a phenomenal online beneficiary of COVID, and their stock, as I mentioned, it's had a nice range for this year, going from 85 to 120, and it's just recently reached its highs. And so at 116, the rate today, if you're interested in that, again, if you're a player of all these games, that's the type of stock that I'd be inviting you to play. Because if you love the product, if you think it's a great product, perhaps you want to put a little bit of resources into owning and being an owner of Electronic Arts instead of just a player of their games. Do you like that strategy of investing? It's worked well for me over the years, and it is something that if it's the first time you've heard it, I really do recommend it as a strategy for your investing. It comes from many, many, many decades ago from a gentleman called Peter Lynch, where he used to talk about walking on Wall Street or walking down Wall Street or walking into the markets and seeing what products you like, what products are popular, to actually do a little research into that. If you like the way the financials are, like I said, I've picked these as momentum trades because they've recently reached highs in a market that is somewhat, it's bipolar right now. We've got a lot of bulls and a lot of bears. Which way are we going to go? In fact, we probably have more bears in the market right now. We've got a lot of people sitting on the sides with capital. And so when they see a EA hit its new high, some people will put more money into it, which will allow it to see even higher highs. And that's one of the things that it is fairly COVID-19 insulated. In fact, it's increased its viewership and its usage given that people have been under lockdown. The next one to take a look at is Activision. And Activision is really been creating a lot of attraction for their video games. I believe it's really a major publisher. It develops, publishes, and produces content. It also has a huge proprietary platform called Battle.net. It operates the esports leagues. And again, it has a number of real important franchises like Call of Duty, World of Warcraft, Diablo. And again, it serves both the retail and the wholesale. And again, it's not a stock that I've delved into because frankly, I'm not a gamer. Yet my friends who are gamers, or my son, this is one that we've talked about for a few years, EA or ATVI. It is hitting new highs. It's Activision has gone from 41.80 to 74.80. And today it's at 72.68. It's had a little bit of a pullback, which tends to happen when a price action happens, when it hits its new high, it'll come back looking to consolidate. And then if it consolidates and there's still momentum, it'll go up again. And so that's what we're looking at with each of these shares. Given that they've just hit new highs, we would anticipate a slight pullback, a putting in a floor of support, and then taking another active push beyond their new highs. And so that type of action is what we do look for in momentum trading. And each of these shares, Zynga, Shop, Etsy, EA, and ATVI, are your momentum shares right now. They're all reaching new highs. They're all very active. And what I've done here in this portfolio is put it together as if you were to put about $2,000 into each of these, it'd be about $11,000 investment. And so what I'm going to do is I've actually picked my number one. It's one that I've been following for quite a while. And my number one would be Shopify. Even though value investors won't see this to be value, I am noticing that there is a lot of momentum. There is still a lot of room that people can buy this. The numbers have been phenomenal from a top line perspective. And it is, while they've released, they're not giving guidance for this quarter, there is a likely more upside to Shopify. My second and third that I'm going to do a little bit more research on are EA and Etsy. And after doing a little comparison of EA and Etsy, I am intending to get back to you in the next week to give you some additional feedback on which one that I will put some money in, or I may put the money in and let you know which one I did, given that the markets are very volatile. Markets are an opportunity to have a small little investment and get a return, or the alternative is to start a position in a stock that I want to be in partnership for a long time. In my other videos, I've talked a little bit about having a portfolio, trading in the holdings. So for instance, in a past video, I talked about JP Morgan. I'm noticing a range right now between 90 and 99. You can buy 90, sell at 97, 98, take a little cha-ching off the table. And it's one of the ways that I like to invest and trade, and something that you may find useful for yourself. Full disclosure about Shopify, I have owned Shopify. I've seen it go up. And I've also been a seller at 400, a seller at 500, a seller at 600. And now I'm wondering whether I'm going to be a seller at 700. But what happens there is that now the shares are technically free. It's how much more do I want to sell, or do I want to keep this last block to a long run? Alternatively, if I decide I can get back in and take a bigger block now, if the momentum trade is feeling good to me, and that's what I'll be looking at. If I get my pullback and I still feel that there's good room to go up, I may increase my position in Shopify also. So I hope that's of assistance to you. This is a good start if you're a momentum trader. If you're new to momentum trading, it is a way for you to take something, hits its high, allow you to have a bit of a pullback, start a position, and then allow yourself to start a relationship with that stocks. If it breaks down, if it's something you no longer have an interest in, then yes, I encourage you to get out of the position, especially if it was strictly a momentum trade. That's called cutting your losses, and it is the number one rule in trading is know your loss position, cut your losses, and get out and get into something that you're finding more attractive. And I'll be talking about that in future videos, as in the last 2 weeks, I have put positions on that I'm ready right now to cut and move it into other positions. And so with that, I'd like to say thank you to your listening. Hopefully we've been of some value today. If you've got some questions, feel free to ask. Look for ways to see opportunities, because in trading and investing, opportunities are everywhere. And we're often here to share some of the things that we're seeing, and we're going to be able to develop further market savvy, financial fitness, and the ability to invest wisely. So with that, thank you so much. Please add a like, subscribe. I really appreciate any feedback or compliments or constructive feedback on making this video more valuable to you. Thank you. Have a great day. Happy trading, and wishing you the very best. Thanks so much.